stock tip. Best stock setups.
Hi, and welcome back again to a new episode of Stock Tip Daily Update with me, Marcel Todea. I hope you enjoyed our action this week and the trades we did. Only 3 trades, but they were pretty successful. Now the market didn't quite do that what we wanted it to do, namely to jump to the 20 moving average. But as I've said the last couple of days, the adjusted target was then the 90 moving average, with the hope of taking a big chunk of our profits at the 90 moving average, and that's what we did yesterday. And if you take a look at it, you can also find this trade on our website, stock-tip.com. The first profits were taken here, the second chunk of profits was taken here, and then the trade was stopped here. So we've pretty much closed at the top here, and we've realized then 1 to 6 risk reward ratio, so 6 times our initial risk. I think here was 5.5 times our initial risk, and in the IVM 2 trades, one finished with 1.5 and one with 1.4. So all in all, a very successful week. Now tomorrow is the last day of trading for this week, and just in the last hour of trading, I entered a new trade, and I will explain why. You see this formation here, this is a triangle. Triangles mostly confirm a trend, mostly. So I think in 65% of cases, so in 2 out of 3, they confirm a trend, and we have here our descending trend. The lines are pretty much still parallel, pretty much still descending. This is our triangle here, and we've had a little bounce and a bounce back down again out of the 200 moving average. This is a pretty vertical move, and normally I would expect a new bounce inside this trend canal here, or name it as you will. But instead of that, we had a sideways consolidation, and I pretty much thought we were going to get a breakdown here, but we didn't. We've tested it, and then we went back up. But here my order got activated, and I remained invested. I think my stop is here. The same I also did in the Nasdaq. Nasdaq is not that not as serious as the SPY. We don't even have here a triangle. We only have a sideways move, and that's why I pretty much think that tomorrow or in the beginning of the coming week, we will see a continuation of our downtrend here. Also, let's not forget about the IVM. The Russell 2000 also showed none of the strength it did on Monday here. It pretty much closed back again at our support level, and if it breaks down again, then I will be happy with my position. Did I activate a position? I don't remember activating a position in Russell. Let me look quickly. You must excuse me. Today I am on call, and I have so much to do. I keep forgetting everything. So I also activated a position in the IVM together with the others. I think it got activated here. So the IVM is clearly on a descending trend. The only problem is the distance to the 50 is a little higher. So temporary bounce won't surprise me. I think my stop is here. What's the strategy now? As I've said, I expect the markets to go down again. A bounce, very small intraday bounce, wouldn't surprise me, and by that I think a move towards 440 is possible, basically towards the 200 moving average. Intraday in the 50-minute chart, I think it's possible. It doesn't have to happen. I don't wish it to happen, but it is possible. So If everything goes the way I want it to go, then we open with a gap down and we continue down, and sooner or later I will take my first profits and then move my stop. If we get a gap up, the market is pretty unpredictable. We finish here up, we've opened down, we finished down, we've opened up, we finished down, we've opened up, we finished down, perhaps we open again up, I don't know. But if we get another gap up, then my strategy would be to cancel my stop order here before the market opens, before it gets activated, to wait the first 15 minutes out, and at the end of the first 15 or 30 minutes, but usually for me it's always the 15 minutes, to place my new stop just above the new 15 minutes candle. And if it gets broken, then it gets broken, then that's how it is. It was a bloody risk, and I hope a gap up doesn't come. But if it gets open, if it gets broken, if I get stopped, then I get stopped, and that's how it is on the market. We are still we still remain with a nice healthy plus. So I don't have any reasons to be concerned, but let's just see what happens. Perhaps the market does turn back around, and we open just the way we should open. So this is the movement post-market. Post-market, there were some pretty hefty movements here, and the most important one was in Apple. I was tempted to also already open a short position, but it pretty much goes against my rules to open any trade without a setup. But you see here, this is what I've been talking about now for about a week or so. 1, 2, 3, 4, 5, 6, almost 2 weeks. Namely, of a bounce here after the breakdown out of the head and shoulders formation. I wanted to wait for a bounce back to the shoulder line here, and then as soon as we touch the 20, I wanted to short this title. So the opportunity presented itself after close, but seeing how I'm already invested here in the SPY and in the Nasdaq and in the IVM, and I'm short, I don't want to risk any more money. If the opportunity presents itself tomorrow again, if we open with a nice gap here and then start going down, then I will try to be there and try to take this trade. If not, then it's something it's a chance I've missed, but there are so many chances here. You see, we only have to wait and wait for the next one. So alone, these 3 days have brought us 5%, and even though we've started the trade somewhere here, and even though yesterday's day ended here, we still made 5% alone from this small movement. So what is a setup worth? Not that much. You just have to wait for the right opportunity, and when the right opportunity comes, then go for it. But remember to remember money management. That's one of the most important things in trading. So this is my this is my action today. Not that much action, and these are the markets. So this is the strategy. You see here this triangle here. I expect a breakdown out of the triangle. I don't expect anything more. And seeing how the Nasdaq wasn't even able to do a decent bounce, what more can you expect? And the IVM is just as bad as the Nasdaq. Sorry for all these things here. I've posted this on our website. I'm happy to remove them. So now you see. So the Russell is just as bad as the Nasdaq. So where should we be going? There is no way up, not yet at least, or I don't think there is a way up. But the market always surprises us. If there is a way up, then this momentum will come from Apple, because as I've shown you, Apple has had a pretty nice move after closing hours, and this is mainly because of the earnings, the posted earnings. But if this momentum holds, tomorrow after open, we shall have to wait and see. If you take a look again, yeah, as I've shown you before, as you're already used to by now, if you take a look at the main titles here, so Twitter perhaps not such a big title anymore, but Amazon also very weak, sideways consolidation, and I expect a nice bounce back down out of the 9, and then Google, the same story, a minimal bounce, but you were never really able to conquer this major support line here or the 200 moving average, and the same can be told in Adobe. Also a very weak consolidation here, and we are pretty much further down on our descending trend. Netflix also very bad. Nvidia just the same as the Nasdaq and as Amazon. So if these big titles don't show any strength, then why should the rest of the market show anymore? And the big ones don't show any strength. The small ones are here in the Russell 2000 don't show any strength. And what should the market do? I just think the market is going to go back down again. On the other side of the story, I remain here with my very amazing hedge on my portfolio. Just today, you see this nice move down yesterday and today, and this has truly hedged my portfolio because I am now 1% up without doing anything. So, but purely without doing anything, just today, because of this movement, my portfolio is 1% up. So this was a very nice idea. We shall see how further this trade goes. Somewhere along the way, we will have to consolidate here, but as long as we remain inside of this trend canal, I don't see any problem. So I think I'm going to give this hedge a little more space. There shouldn't be any problem and any reason for concern now, but there is this support line that we've just broken through. Perhaps we will see a nice consolidation here the next couple of days, and then the continuation of this downtrend. If we reach 1.0, then I will be happy. I will be very happy. Then I will make perhaps another 2 or 3%. But again, we just have to wait and see what happens. What is the German market doing? Pretty much the same. The German market had a nice bounce here. They touched the 90 moving average, but again, only the 90 moving average, and then turned back down again. Only that we've closed above the last support line. So, as I've said before, the German market mimics the US market. If the US market continues to go down, then the German market will go down, and probably with such gaps like we have here. So the German market on its own has no footing. That's why I don't trade any European titles. The German market on its own can stand a chance when the US markets are falling. But the opposite is not true. If the German market falls, it doesn't mean that the US markets can't go up. And so in 2 out of 3 times, you don't have any luck by trading the DAX. So why do it then? Especially when you see such gaps and you see them overall. So that's why I don't do it. Gold breakdown. So yes, another gap, another huge gap, because we finished here and we opened here. That's what I was saying about gold. This is just a little nasty. So gold and silver, they are very nasty. That's why I stay away from them as far as I can. So silver, I expect the same. Yes, that's the same stuff here. So a huge gap down, but a very huge gap down. I'm sorry if you've lost something on gold or silver. If you do have any losses, then remember next time just small positions, and be very, very careful and think twice if you really want to trade these titles. Lastly, my last remaining position got closed today. I decided against opening back up again. If it's a good idea, I don't know, because if you take a look at the daily chart, where is the daily chart? The daily chart, here we hit the 50-day moving average. We had a nice aggressive bounce. Here we hit the 20, we had a nice aggressive bounce. Here we hit the 15 again, another big bounce here, another 30% or so. Yes, 33%. Here we hit the 50 again, and another 40%, I think, from here to here. In one day, 37.5. And now we've hit the 50 again. So after so many consolidation days, I won't be surprised if another breakout comes here. So this is very, very possible. But seeing how I am anticipating that the market crashes, then I don't think I should hold on to this title any longer. It's been stopped twice, and twice is enough. Twice is for now enough. If the market conditions were any other than they are today, then I assure you I wouldn't have let this title go, but it is what it is, and we have to stick to our plans, to our strategy. And the strategy is pretty clear, and is when the markets fall, don't do any swings, and don't hold on to any trades that you have. If they get stopped, then let them be, and wait and see what happens. Okay, that's all for today. We continue with a third part of our video shortly, with the setups, with the remaining setups. Even though I have to again remind you to pay attention. If you do want to do any swing trading now, think twice. It's a very difficult time to go swinging now. Perhaps you should wait for another big bounce or for the market to turn. On the other side, on the other part, you should, or you could do some shorting, but that I also don't find it a very nice, very good idea. I find it the best idea to do your shorts in such market conditions directly on the main indexes, because all other titles are going to just mimic the movements of the main indexes, or just go with the flow. So the market is your friend, the trend is your friend. If the market falls, then you shouldn't fight against it, you shouldn't try to be smarter than it, and vice versa, of course. Okay, now remember, if you do like our video, don't forget to like and subscribe. If you have any questions, write them down in the comment section. We also have some interesting stuff on our social media platforms, Facebook and Instagram. And remember to visit our website, stock-dip.com. Of course, it isn't what is supposed to be now in the correction, but it's it is the place where you get your best setups. Perhaps not now in mid in the correction, but usually it is. Okay, see you tomorrow.